Richtech Robotics develops advanced robotics for sectors experiencing labor shortages, such as hospitality. They produce robots designed for various services, like restaurant running, hotel room service delivery, floor cleaning, and food preparation. The company aims to become a super operator, deploying thousands of their robots in businesses with the help of their AI cloud platform, ACP, which optimizes workflows, reduces management complexity, and minimizes labor dependency. They entered into a letter of intent with Ghost Kitchens America to acquire exclusive rights for operating 20 Walmart-located one-kitchen restaurants, aiming to optimize their operations through robotics and AI technology. The company also conducted a public offering of shares, pre-funded warrants, and common warrants, raising approximately $19.4 million in net proceeds. The funds went towards working capital, general corporate purposes, and procurement of inventory specifically for robotic hardware. Additionally, the investors exercised their pre-funded warrants in full. Exercising common warrants resulted in approximately $13.2 million in aggregate proceeds. Richtech's product offerings are categorized into 3 kinds of service automation: indoor transport and delivery, sanitation, and food and beverage automation. Their target market is the hospitality sector, meaning restaurants, hotels, casinos, resorts, senior care, hospitals, and movie theaters. The majority of their robots are autonomous mobile robots, AMRs, that understand and move through their environment independently using advanced sensors such as LiDAR, RGBD cameras, ultrasonic proximity sensors, and machine vision to recognize objects. Their ACP service is a business optimization tool that allows customers to benefit from operational data generated by the robots, enhancing guest experiences, minimizing waste, and providing detailed operational data for analysis and reporting. The company has 4 main product lines. The indoor transport and delivery category consists of Maitre-D, Medbot, Titan, and Skylark. Maitre-D is designed for dining spaces and can be used for busing, serving, hosting, advertising, and entertaining. It has a large carrying capacity, is extremely stable, and can operate independently for 8 to 14 hours between charges. The robot communicates with others over short-range radio waves to coordinate and make way for each other. Maitre-D is currently deployed in restaurants, hotels, casinos, senior living homes, and factories, primarily delivering food from the kitchen to tables and busing dirty dishes back to the dish pit. Robots like Medbot, Titan, and Skylark are designed for specific applications such as secure deliveries in hospitals, heavy-duty AMR tasks, and room service in hotels. These robots are modular, adaptable, and can perform multiple functions with the help of attachments. Dust-E offers autonomous commercial cleaning robot products lines, namely the S and MX models. The S caters to medium-sized spaces under 100,000 square feet, providing efficient one-pass cleaning with advanced features like precise localization and scheduled cleaning functions. Future iterations may include AI-driven categorization systems adjusting cleaning routines based on mess type. The MX is designed for large-scale professional cleaning in places up to 500,000 square feet, with various configurations accommodating different floor types. It comes with a large water tank and high brush pressure. Both models are supported by an AI cloud platform, ACP, providing clients with utilization metrics, cleaning maps, routine replacement reminders, and preemptive maintenance alerts. For food and beverage automation, there's the Atom, which is based on NVIDIA's Jetson Orin platform. Atom has dual 6-degree of freedom robotic arms for flexibility and is built to look friendly and approachable while avoiding the uncanny valley effect. The robot can make various beverages autonomously and is currently being used in supermarkets, stadiums, hospitals, coffee shops, corporate events, and celebrity gatherings. The company also plans to launch 20 robotic restaurant locations inside Walmart stores across the country during 2025. Cliffy & Tea is a restaurant brand owned by the company, aiming to integrate innovative technology into coffee and tea culture. It serves as a platform for testing new robotic technologies while providing an engaging customer experience. The franchise model demonstrates the successful integration of robotics into coffee and tea shop operations since the inaugural store opened in Las Vegas in February 2025. When looking at the wider robotics landscape, Richtech describes the industry as being focused on providing robotic automation solutions for labor-intensive businesses, particularly in hospitality, but also extending to various other sectors such as agriculture, healthcare, and military. The market is said to still be gaining experience in adopting these non-industrial service robots, with the primary driver being the ongoing trend of automating menial or non-value-adding tasks. Market opportunities for Richtech's robots and automation tools is mainly in sectors facing labor shortages, such as restaurants, hotels, and healthcare. It states that these industries contribute significantly to the U.S. economy, providing ample opportunity for growth. The increasing trend of automation in physical work benefits businesses by addressing labor challenges, improving guest experience, lowering costs, and providing a stable long-term solution. Moving ahead, plans look to expand their customer base and sales pipeline by targeting healthcare and automotive sectors. General strategies involve expanding their commercial organization, penetrating the hotel market with Medbot and Titan, launching and scaling their robotics franchise brand, establishing enterprise partnerships, expanding their R&D team, and pursuing international expansion through joint ventures. Their aim is to become a leading provider of service robotic solutions by addressing the need for automation across various sectors and offering innovative products that cater to specific target markets. The company also plans to shift to a robot-as-a-service business model for most of their mainstream robot solutions. This model offers more flexibility, cost-effectiveness, and scalability compared to outright purchases. For customers, robot-as-a-service eliminates large upfront investments, turning capital expenses into manageable operational costs while minimizing financial risks and ensuring ongoing maintenance and support. It also enables seamless upgrades and fosters lasting customer relationships. For the company, robot-as-a-service creates a predictable recurring revenue stream, reduces reliance on finding new customers, and deepens understanding of market needs for tailored solutions. The transition involves additional risk, but is believed to outweigh it due to benefits such as increased deployment numbers and customer adoption, resulting in at least a 34% boost in customer lifetime value over 5 years. Competitively speaking, Richtech leans on its first-mover advantage, extensive deployment experience and market knowledge, reliable technology, broad product offerings and synergies, strong distribution network, successful enterprise partnerships, innovative business model, and comprehensive market coverage. All of which are factors they say contribute to their position as a leader in the non-industrial service robotics market. To stay competitive, Richtech states there is a need to effectively manage product introductions and transitions while continuously developing improved robotic solutions that meet evolving consumer needs. This involves significant investments in R&D, promotion, sales channel development, and inventory management. Success depends on accurate market forecasts, adapting to new technologies and trends, timely completion of designs, cost-effective manufacturing, reliable supply chain, and retaining top talent. Along with market competition, Richtech needs to deal with customer education and adoption, service coverage and costs, labor shortage, and rising cost of raw materials. Competitors in the restaurant industry put pressure on their margins and increase marketing and sales costs. Customer hesitation towards adopting new technology slows down sales and increases costs. Limited nationwide maintenance networks leads to relying on more expensive local third-party resources. The labor shortage affects staffing, especially for technical positions, making it costly to attract good talent. Inflationary pressures make it difficult to project component costs, impacting profit margins and requiring regular pricing evaluations. Some of these challenges can also be attributed to the diverse customer base in the hospitality sector, ranging from small businesses to large enterprises. But nonetheless, they successfully deployed robots across various environments like restaurants, casinos, hotels, factories, schools, senior living facilities, hospitals, and stadiums. The company is focused on expanding into additional market sectors beyond hospitality in the upcoming fiscal year, targeting industries where robotic-assisted operations offer a strong ROI with low deployment complexity. Customers are often referred to them by other companies due to their proven track record of successful robotic deployments. They cater to both B2B and B2C markets, with plans to grow their customer base through strategic advantages in each sector and leveraging relationships within their distribution network. To keep customers satisfied, Richtech Services encompasses nationwide installation, shipping, maintenance, and warranty services. Maintenance visits involve health checks, cleaning, setting adjustments, and staff training. Warranty claims are processed quickly, with exchanges completed within 5 business days, if valid. Regular client check-ins ensure satisfaction and address any service requests. Remote diagnostic functions aid in efficient troubleshooting, accompanied by lifetime remote customer support. Custom designs and materials enhance the customer's experience and tailor robots to their needs. Though on the supply and manufacturing side, Richtech relies on over 20 major suppliers primarily located in the United States and China. Some of these suppliers provide sole source components like batteries and touchscreens, making the company vulnerable to disruptions in supply or increased costs, which could impact Richtech's ability to develop and commercialize their products efficiently. This reliance also poses additional risks, such as regulatory non-compliance, manufacturing and supply agreement breaches, inability to meet specifications and schedule, misappropriation of proprietary information, and potential termination of agreements. The company may need to replace non-performing suppliers, which could also affect profit margins and product commercialization efforts. Switching to alternative sources may involve redesigning products, causing potential shipment delays and operating result impacts. To mitigate this risk, the company plans to diversify suppliers and implement contingency plans. Other supply and manufacturing risk mitigation is already in place since Richtech starts, by identifying suitable suppliers who sign confidentiality agreements, followed by selecting a preferred and 2 alternative suppliers after thorough comparison based on common factors like price and reputation. The next step involves choosing an original design manufacturer, ODM, or original equipment manufacturer, OEM, partner, to manufacture products as per the company's specifications. These factories are chosen through a similar process of evaluation for their capabilities, quality, delivery cycle, and pricing. Once prototypes are finalized and rigorously tested by the development team, they proceed to mass production after forming a production schedule based on sales projections. After completing the production, procurement team conducts an on-site quality inspection, followed by technical department's quality control checks at the warehouse before delivering the final product to customers. As for sales strategies, marketing efforts, and logistics processes, Richtech forms relationships with influential companies in each sector. It serves and leverages partners' resources for rapid revenue growth. They build networks of referral agents, independent sales agents, and distributors, ensuring prospective partners have the necessary capabilities and customer base to represent their brand effectively. While a professional internal enterprise sales force fosters client relationships, the strategy for selling to enterprise customers, which they define as companies with annual revenues over $1 billion, starts with pilot programs to prove the value and reliability of their robots. Each program typically charges between $500 to $17,000. After the evaluation period, which lasts between 14 to 30 days, customers can decide whether or not to purchase Richtech's products. 2 MSAs have already been established with major casino and hotel brands, while a third MSA with a large restaurant chain expired in September 2024, but is expected to be renewed in fiscal year 2025. Additionally, the previously mentioned binding letter of intent with Ghost Kitchens America to operate 20 Walmart-located One Kitchen restaurants using their robotics and AI cloud technology. Richtech acknowledges challenges can arise when selling to large corporations due to their significant bargaining power and exacting standards. So securing contracts with such customers may require substantial investment of resources and time. Marketing efforts primarily involve digital marketing, industry exhibitions, and client referrals. The company also attends national conferences like CES and the National Restaurant Association Show for exposure. Client testimonials significantly contribute to growth. Order processing and logistics are managed internally by a 5-member team. They process orders, ensure proper procedures are followed, and coordinate with freight carriers such as FedEx or Pegasus Logistics Group for shipping. Over the past few years, R&D has revolved around continuing to develop their dual-arm robot, while also introducing Scorpion, a single-arm robot designed for more lightweight applications. They've also created a mobile platform for Scorpion and focused on enhancing their robotic cloud management platform. For delivery robots, they've worked on refining hardware, software features, and workflows tailored to specific industries. The company is committed to integrating cutting-edge AI solutions into their product offerings, ensuring that their robots stay at the forefront of innovation. So far, the business has mainly been US-based. They outline potential risks associated with plans for international expansion, namely limited experience managing a global organization, difficulty creating or maintaining market demand abroad, challenges in providing support and localization for products, increased management complexities, unfavorable legal conditions, and financial constraints. The company may also face regulatory hurdles such as tax laws, trade restrictions, and intellectual property protection issues across different countries. Regardless of whether international expansion is pursued in the near future, this robotics company will definitely be one to watch closely. For more on Richtech Robotics and other companies, follow Ascencore. Thanks for watching and have a nice day.